It's been a day of superlatives for the stock markets. Biggest sell-off since COVID, steepest weekly decline in years, longest losing streak in over a year. Nifty opened gap down, plunging up to 1,160 points or 5.1%. The BSE Sensex fell nearly 4,000 points before recovering later in trade. Investor wealth of a whopping 19 lakh crore rupees was wiped off. All sectors were in the red. While the root of the chaos is the massive burden of Trump tariffs across the globe, other elements have added tadka to the mix. China rattled world markets by retaliating with its own 34% tariffs. Beijing's stance that it will not fold under pressure has sparked concerns of an all-out global trade war. The trade war is also expected to drive up inflation, shrink corporate profits, and hit consumer sentiments. There could be a delay in rate cuts and, in the worst-case scenario, lead to a global recession. Every major stock market around the world was deep in the red on Monday, especially after Trump's comment on bitter medicine.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world. I don't want anything to go down, but sometimes you have to take medicine to fix something.
Meanwhile, Indian investors now have their sights on the RBI rate decision on Wednesday. Even the US president is rooting for a cut in interest rates. In a post on Truth Social, Donald Trump demanded the Federal Reserve chairman cut rates. Citing a drop in inflation and energy prices, he asked Jerome Powell to stop playing politics and slash interest rates, triggering this comeback from Powell.
So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments, so I don't want to be seen to be doing that. It's just not appropriate for me.
The pushback by the Fed chair added to Wall Street woes, with investors more uncertain of a rate cut by the US central bank than ever before. Jerome Powell made it clear that he was not toeing Trump's line, saying the tariff hike were larger than expected, leading to higher uncertainty and a rise in downside risks. He also said that this could lead to a return of high inflation and slower growth.
We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Central banks around the world are in thick soup after Trump's tariff shocker. Before the announcements, most had taken a dovish stance, with most post-COVID challenges easing. The tariffs, which most agree will lead to higher prices and uncertainty around the world, adds more confusion into the mix.